What is going on, everybody, and welcome on into the TC Trading channel. So today we're going to be talking about LEAP options, and we're going to be talking about how to trade them, how to buy them on Webull here. So right now we're on our Webull customized layout. We have plenty of videos here on the channel diving into Webull desktop, app, all that stuff. So if you want to check out more videos after this, diving deeper into what it has to offer, definitely check out our Webull playlist. So in this video, I wanted to show you how to do this not only on the desktop, but also on the mobile app. So while I do this on the desktop version, I'm also going to put up the mobile app on the side and do the same exact thing simultaneously so you guys can see how it looks both ways in case you're more of an on-the-go mobile trader or you're someone who likes to look at it on a computer, on a laptop, on a desktop, something like that, a bigger screen. So first off, we got to talk about what are LEAPS, okay? So LEAPS are long-term equity anticipation securities. So the core to options trading is that you're able to leverage less money to make more, right? So let's say you're looking at a stock, and obviously, you probably have seen videos and seen stuff on Wall Street Bets and online and stuff, people making thousands of percents on a stock, crazy stuff. And you can do that on, even Apple, your Google's, Amazon. You can do that on the big name stocks. So that's where it allows you to trade the bigger name stocks, not have to worry about penny stocks to try to, make larger gains. But what you can also trade is LEAP options, which, think about it, it's the name, long-term. You're looking at long-term options, and generally, they're longer than 1 year out to the expiration date. So you might ask, why would you want to do this? Well, wouldn't you just buy shares? Well, yeah, you could certainly buy shares and just hold shares and not have to worry. And then with shares, you have the ability to buy and sell in pre-market and after hours on a Webull. You can do that from 4 a.m. all the way to 8 p.m. We'll leave links down below to Webull, all the platforms we use, like always, in the description box down below. But you can do that, during any hours. However, options you can only trade from 9:30 a.m. Eastern all the way to 4 p.m. Eastern, and that's it. Outside of those hours, you can't trade options. So that's one small restriction. Obviously, for some stocks, it's not going to matter too much, but it could help, right? It could help to have that after hours ability. But now with LEAPS, instead of looking for, and we'll do a live example here, instead of looking for, let's say, a 20 to 30% return on a given stock, right? You can buy an option contract and get a larger percent return, or you can even buy an option contract, a LEAP that's even in the money, and look for a similar percentage return, but you can leverage less money. So we start to think about this, and it starts to make sense as we dive a little bit deeper into how this stuff works. So let's dive on into Webull again. Right now we have pulled up JetBlue. I actually have some calls. I'm actually buying LEAPS on JetBlue right now, and I'm going to buy another one as we speak. So here's JetBlue. And so we got to go to the option chain up in the top right on, there's a widget section. I already have the option chain underlaid underneath the charting featured. I go back and forth between those two. So I go to the option chain, and here we are. Now, LEAPS, we got to find, where we can buy LEAPS and how we can buy LEAPS. And obviously, we'll have to dive deeper into January of 2023. From when I'm filming this video, it is August of 2021. So this gives me well over a year until January of 2023. Now, I'll show you guys that in just one second. Let's talk now about the value, right? The idea behind LEAPS, okay? So we're looking at the chart here. I'm going to use the 1 year, 1 day chart, okay? I actually have some contracts already building out a position on JetBlue as it's been pulling back the past couple of weeks. And so I'm looking at JetBlue right now, and I'm saying to myself, you know what? I still think that this travel demand is going to be very substantial in months to come, right? Maybe in the short term, maybe not so much, but in months to come, JetBlue already showed us, hey, it recovered from, sub $7 all the way back up to over 20, and now it's back under 15. I like JetBlue down here or even lower, and I want to see a target up towards 18. I have this $18 target. That's my first target. Obviously, I like to see some more, but 18 bucks is my lower range end of the target that I'm looking at. And so I'm thinking to myself, okay, from here right now, JetBlue from here to 18, that's about 21% upside. Great, sounds pretty good, right? Sounds good to me. Now, if we look at option contracts, well, we have to understand that there'll be intrinsic value. So if I'm buying option contracts at $12 and $13, now they're going to be more expensive now in the short term. However, I'm holding value, right? They have intrinsic value because these are in the money, right? These are call options, which I'm essentially betting on the stock to go up over this period of time. And in the next 6 to 18 months is my bet, right? In a sense. But if you do the math on these option contracts, first off, a $12 strike price contract is going to have, if we get to that $18 target, that's my first target, this contract is going to have $6 of intrinsic value. So now we start to back our way into this contract and how expensive is it right now, and does this make some sense, and could this be a decent opportunity? that's where I start to see the value there, okay? So now I'm going to go to the option chain. I'm going to show you guys the contracts, and I'm going to buy them right here live for you guys. So I currently have the phone pulled up as well. We're looking at JetBlue on the mobile app for Webull. I'm going to go to the option chain right here. And on the left-hand side, we're going to have multiple options, and over on the mobile app, you guys can see that there's plenty of strike prices to go from. We're going to go and select the January of 2023, January 20th, 2023. That's the expiration date that I am looking for, and I'm going to select those. It's going to give me 536 days from right now until that expiration. Okay, so now we got that pulled up on the screen on the app and here on the desktop platform. I am going to go into the call side. The left side is calls, the right side is puts. I'm looking for a bet to the upside, so I'm going to buy another one of these $12 strike price options, okay? And so we're looking at between 460 is the ask and 445 is the bid, at least as of right now. And I'll pull that up here on the mobile app as well. Click on that guy right there. And so this is where we're sitting at right now on this specific play. On my order entry that I'm on the buy side, I'm looking to buy just one contract for right now. And I'll be looking to buy more if we get, lower prices here on JetBlue. And I'm going to set my limit price. Let's go for 455. And let's see if we can get filled there. But again, this is January 20th of 2023. So we got 18 months or so from right now until this expires. So for me to lose money on this play, JetBlue would have to be about $16.50 or lower by the expiration. So I am betting on JetBlue to hit 18 in the next 6 to 18 months. And if we hit 18, that's going to be some nice upside to the order of more than if I was to just buy some shares. That's why I like this play, not to mention if we see 2022, then that would be even more upside on this play. So again, I'm going to be buying more than one contract, so I'm looking to scale this one out, selling my first contract when JetBlue hits $18. The sooner this happens, the better, because I'll make more money. Now, if this happens closer to the expiration, I'm going to make less money. However, if JetBlue wants to go to 18, even 20 in the next 6 months, these contracts, you bet, are going to have a nice, juicy value to them. So I'm going to go ahead right now and click on place order here on the desktop platform. It is going to ask for the confirmation, and just like that, it is in and it has been filled. So we can see that it has been filled, and over on the mobile app, obviously I can do the exact same thing. Long call buy 12, and I can go to the next page right there and then submit my limit price, how many contracts, which is the same exact thing that I just did on the order form here on the desktop platform. Now, the biggest thing you have to understand here is intrinsic value. If you're looking at these stocks and you're looking at them and say, okay, and you're just randomly buying strike prices because why not? That could easily get you into a lot of trouble if you're not paying attention to intrinsic value. That's why for me here, I am buying in the money options because there's less downside risk in the short term. They're going to hold more value intrinsically right now. Worst case scenario, the downside risk here is less than if I was to go and buy, let's say I bought the $18 contracts all the way out for 2023, right? Of course, there's a risk of these expiring or the stock never getting to 18 and these expiring worthless, right? So that my entire investment can go to zero. That's with options that you're looking at out of the money calls. In the money calls, they're going to be more expensive in the short term, but I can leverage essentially less money now. For example, one contract I just bought was about $450. If I want to get the same kind of leverage, I'll have to buy 100 shares of JetBlue, which is going to cost me over $1,400. So I would much rather spend $400, not tie up as much capital in my account, my portfolio, and look for a gain to the order of 30, 40, 50 plus %. Obviously, the sooner it happens, the higher the gain is going to be. But worst case scenario, I'm still targeting up towards that 18, which would be a nice gain from the current levels, taking the contract intrinsic value to at least $6, which right now we're looking at the contracts costing about $4.50. That's $1.50 of upside per contract, which I can't complain with. So there you guys have it. Let us know in the comment section down below your thoughts on this. If it helped you guys out, consider subscribing for more videos just like this. If you have more questions on Webull, we have a playlist for you there. If you have more questions on options trading, how that stuff works, check out my other channel linked down below, Thomas Carver. That's my personal channel. I have a massive options trading playlist on that channel as well, diving into a lot of the details, options. If you're confused on how the basics of options work, calls, puts, how you make money, how you lose money, all that stuff, and that would be a good resource for you there. Appreciate you guys so much for tuning on in, and hope to see you guys in the next video. Check out those links down below. Webull is going to be giving you guys 2 free stocks when you sign up and deposit just $5 on the platform. We use it here all the time. Thanks so much, and we'll see you guys in the next one. Peace.